GKFX Prime presents the Market Analysis Webinar.
Hello traders, and welcome back to another analysis video with yet more setups and opportunities. It's a new week and it's also a new month. So we'll be looking at some interesting setups for this week and going forward for the month. My name is Dima, and as always, I'll be taking you through some of the chart setups that I've seen for this week. And this week is the 4th of July. And let's have a look at what we've got for this week's opportunities. Let's see if we can make the most of it. Thank you for joining me. Hope you had a interesting, fruitful trading week last week, and as ever managed your risk, of course, not forgetting. So I'm going to just briefly take a moment to mention the calendar and the news that we've got this week. We do need to pay attention to Aussie currencies, Aussie pairs, because on Tuesday we have a rate statement. So that will be a major piece of news to pay attention to. On Wednesday, we've got FOMC minutes, another big one on the dollar. So that will relate to the dollar pairs. And on Friday, we've got an employment change on the CAD, and that will be in line with CAD pairs, and of course NFP, because first week of the month, NFP week. So that will be a big one to look out for as well. Okay, with that, we'll keep that in mind. Just bear that in your mind, and we're going to have a look at how the setups look at the moment on the charts, and we'll see how we can combine that with the time of the news and the see where the high probability is. Okay, I've got 7 charts for this week. I narrowed it down, and let's see what we've got. Right, I'm going to start as always with the majors, and the major pair that I've got for this week is the Aussie dollar. Let's look at the monthly candles. So we've got this month's candle, which is currently in play from the Friday 1st of July, and this was last month's candle, and as you can see, it closed bearish, and I had this level for the market to hit from previous week, as we've done so, and now we're going to look for a possible lower level and continuation. You can see here last week, this last week's candle closed lower, closed bearish, and we may see a continuation. Now let's check the fib levels from the low to the high. We've reached the 50 level. Next level I'll be looking at is the 61.8. So I'm just going to drag this level here, take off the fib, and let's look at the lower time frames. So if I look on the 4-hour, this was last week, expected a retracement and a continuation down, which we had. So I'm going to just delete all of this. So here's this last week that we've got here. I'm seeing a interesting level here. So I would like to see the market retrace to this higher price. We've got this gap where the market moved off from this high right here. You can also draw a fib from the high to the low, and this falls within 61.8, and just above is 78. And then from this zone, I'll be looking at a continuation down. Now, I have no idea how far the market's going to go, or whether it's going to go this far to this level, but that's a nice risk to reward trade there, and you'll be able to take profit along the way well before this this price level here. And the line that I was looking at ultimately is 64.80. Let's say we'll call it that, or you can round it up to 65 just before to be safe. So that's the Aussie dollar, and we've got as well, by the way, side note, continued strength on the dollar as well. It's ranging, but overall it is strong. So that would show weakness, or in terms of correlation, hint at weaknesses in the currencies pairs linked to the dollar, just like the Aussie dollar. Right, that's that. And I'll go to another Aussie pair here, Aussie CAD. Remember, bearing in mind that we have the Aussie news, we have CAD news. So we're going to watch out for the volatility to come in and for the price to begin really moving with momentum around that time. Aussie CAD. Again, going to look at the monthly candle. So this is the current candle, considering continuing weak, I should say. Previous month was bearishness, as we expected, bearishness as well. Previous week very bearish, as you can see, and we hit our levels from previous week that we had in mind. We looked at that last week, I believe. Yeah, and we are looking at this zone. We can see price, if I delete this, price didn't quite reach there and it just melt away. So similar thing as with the Aussie dollar, I'm going to do the same thing with the Aussie CAD. I'm looking at this next level to the market to reach for. If I just zoom out a little bit, which is about 150 pips away. If I look on the 4-hour time frame, again, gonna look for a retracement into this zone. Nice, expensive price to sell from, and the continuation down. Now, again, don't know if it's going to reach this level right here, which is the, let's have a look, 86.20. But let's see what happens. It's still going to be a decent risk to reward trade and be opportunities to take profit at this swing here, if we get that, or depending on your risk management and your strategy, perhaps lower down. Okay, that's the Aussie CAD. And in this case, the issue with the Aussie CAD here is we've got both the news items on the two currencies. So we've got the Australian dollar and we've got the CAD, because we have news on 2 different days and we may have 2 different points to watch out for where volatility will come in. So got to be careful with that and watch out, manage your trade properly and your risk. Just to remind you in case you forgot. Right, next one, I'm going to go to another cross pair, which is the Euro Yen. Look at the monthly. Previous month's candle was clearly bullish. Current month is in play right now for July. So I'm going to look at possible continuation of the bullishness. What I'm seeing here is a clear triple top. And since it's pretty clear, I can imagine that many traders will have had the stop loss here. So the market may want to hunt that liquidity, may want to go for this high right here before it thinks about a drop. So because of that, I'll be looking at this level as a target. Now that I've got that in mind, I'm going to go and look at the low and the latest high, which is up here. Let me just shift this to the side a little bit so it's a bit clearer. The possible target, so that's going to be the 144.30 and possibly beyond. Let's look at the weekly. We've got a level right here. I don't know if it's going to go that far, but we'll just go conservative, and I'm going to stick with the 143.30. Sorry, what is that? 144.30. Okay, let's look at the lower time frame. I'm going to go to the 4-hour. This was the last week, and I can see that we're now at a nice deep retracement area. We're at this zone, so we may see a nice bounce from here with the start of the week. Now, first of all, to get a nice better probability set up, I'd like a break of this previous swing high, and then a retracement to get a cheaper price, and then possibly a continuation. So the entry will be something like this. That will be a high probability. Now, obviously, there's also a chance to enter here at a lower price, and if the market goes even lower, there'll be another opportunity lower. But you have to manage your risk and see which type of scenario, which type of entry you prefer taking, and always remembering that you gotta only risk what you can afford to lose, and bear in mind that if you are taking a riskier entry, then that is your prerogative and your responsibility for your own account. That's the scenario where I see the higher probability playing out, but we'll see exactly how the market unfolds Monday, Tuesday. Let's see how it goes. Right, that's Euro Yen. Let me go now to, I'm going to go down to silver. Let's have a look at what's happening on silver. I'm going to start with a monthly. Let's just zoom in. So last month, this candle, very bearish, very clear to see. Current month is in play here. And if I zoom out and I take a fib on this whole big move where we began this massive run up to the high, we're now sitting at a point between the 50 and the 61.8. And I would prefer the market to reach the 61.8 level before properly exhausting itself, which kind of also coincides with this support resistance level. So at the moment, what I'm seeing, because this is a big, you can see the strength of this move, this big move here was very clear to see. And this is just that retracement of this big move. So I am looking for overall higher prices in the very high time frame. This is the monthly, remember, but at the moment I can see that we're in a retracement of this higher picture. So you can see very small, very gradual movements down here indicates that this is a likely retracement of this higher time frame. So now we're in the monthly, bear that in mind. Last week closed bearish as well, and with that continuation in bearishness, you see not only closed bearish, but it also broke and closed below this swing. So very clear bearishness to see. So I do expect a little bit more of a stretch into this zone here. So this level 61.8 will be the 18.4 price level. And now that I'm looking at that, again, I can go to a lower time frame. Last week, you can see, by the way, as a side note, not last week, a few weeks before that, I think I was looking at this for the price to come into the zone and drop, and it did just breach a little bit more, pull back a bit higher and then dropped. So let me just delete all this previous week's analysis. And yeah, okay, let's drop into this lower time frame. Let's see what's happening. So the last swing I see is from here down to where we are right now. The 61.8 falls here, and a deeper retracement 78 is up here. So the zone, sort of rough area to look at, is something like so for me, and that would be a nice, more expensive price to short from. I don't want to short from down here. It's not a great price, and leaves a lot of exposure and a not very good risk to reward. So yeah, much prefer this level up here. I see that as the higher probability to short from. Of course, the market could just, who knows, you could just tank from here. It's very heavy at the moment. It's really in extreme bearish territory for this moment. So that's the scenario on silver. Okay, let's move on. What else do we have here? After silver, let me go to, let's go to the S&P index. Again, go to the monthly. And it's becoming very obvious now that we are in bearish territory. We've got very strong bearish candles. This one, and this one. And the pullbacks have been shallow, been brief, and then we have the continuation. We've got these lower lows. It's clearer to see on the weekly, lower lows, lower highs. And if you like, you can kind of draw this channel here, you know, with the, just to make it very obvious, if you want to do that. And now let's see where we're at the moment, and is there a setup? Okay, last month closed bearish, closed bearish below the previous month, and it closed below that price level, so does show bearishness. So we're going to look for a pullback And after the pullback, we're going to see if there is going to be a drop. So at the moment, what I see is that we may be in the middle phase of this pullback. So if I draw a fib again from the last obvious high to the low, we reached this 50 level, bounced off, and again, the preference that I have in terms of high probability is a higher price. So the higher price would be the 61.8 and above. That would be expensive territory, and expensive is good because that's where we want to short from. So let's see if the market does make this pullback into this zone, or if it drops further. If it does drop, then I'll be neglecting the S&P and waiting for another scenario. So at the moment we've got this sort of channel, we've got this extreme bearishness, some people call it oversold territory, and now we have broken previous swing. So with that we may have see a shift in the structure of the market, and we may well see the bullishness, brief bullishness here into this zone, and then continuation down to the bearish side even lower, and we'll see how low we're going to go. Now if I go to the weekly, the next level I see, the first obvious level is the current swing low, so it's that, and then the level after that would be this level right here, and then beyond that the next obvious swing, which is right here. So we do have some nice risk to reward opportunity with the short. Now the riskier entry here would be a buy into this zone. So already we have some price action rejecting off this lower time frame level. So very nice wicks here. We've got a bit of bullishness showing in the market. So, but that is a higher risk because the overall flow of the market, the overall direction is to the downside. So this could act as a possible buy scenario to then sell. But again, you have to be very nimble, and you need to really manage your risk well to carry that out. So I'm just showing this to you as a possible scenario, but the favored setup is the short. You're going to be more in flow with the market there. And this may be a sort of uncertain, laborious, not a very smooth ride. Let's call it that way. Again, S&P, remembering the news, we've got NFP and we've got FOMC minutes on Wednesday. So we could see a bit of uncertainty, a bit of volatility. Let's see how the market plays out. We may even have, do want to see some price action around here, because we may go even higher up into a higher level. And if the market does that, we get an even better price, but don't want to short it until there is some confirmation. So that's what I see as the more likely higher probability scenario. Let's see how the market plays out in either case, and let the market do its thing, let it play out. And if there is volatility, let it do its thing, and we'll see how it wants to finish. And the price action of the candles will tell the story. Right then. What's next after S&P? Let's go with oil. Let's zoom out to the monthly. What do we see? Right. Previous monthly candle was bearish, but we are now still in an overall bullish trend, bullish scenario. So the bullish buy is the buy setup, the buy direction is the favorable one. Looks like the more likely one. So I'm going to favor that for now. Let's look at the weekly. On the weekly, this whole thing may be a pullback. I did mention that if we do see the market breach this level, that will be invalidate the the buy scenario, the more favored outcome, more favored direction. But the market hasn't done that yet. Let's look on the daily. We've got a reaction of a very deep retracement. If I draw the fib, I'll just show you, just so it's clear in front of your eyes. Bounced off this 78 level, broke the structure right here. And I think I was talking about this last week. If you're with me, we break a structure, get a pullback and continuation. So we have had that pullback. The pullback has been much deeper than expected, than I outlined here, but it's still a pullback. So if this is indeed that swing, that pullback swing, we should not see a break below this level, and this level should indeed hold. If that's the case, and if the market is continuing higher, then we should see the clear momentum to the upside. Let me just delete these. Might be a bit easier to see. Get rid of these lines, just clean up the chart a little bit. I'll take away this fib as well. Right, so if we do see that push higher, and we then also break this high, that will be a very clear, very firm confirmation that the probability is to the upside in that case. If we get a breakdown below this level, that'll be the first sign, and below this level would be an invalidation point for me, because we've already had this retracement down here, and we broke a structure level up here. So the next opportunity I'll be looking for is for the market to reach higher, then perhaps make a retracement, a nice better price, and then continue to the last obvious high, which is here at the 121 level. If I zoom out on the daily, the next part would be the 126 and beyond. Okay, let's see how the market plays out. For now, we may need to give it a bit of time, and the news might also be a driver here. Let's see how it plays out. At the moment, it's a bit uncertain, and considering that we had this wick on the previous week candle, this shows that the market may not be as strong as I think at the moment. And if it was indeed bullish, and it was clearly bullish, then it would close bullish, but so far didn't have that. So let's see where it goes. I've got these basically two reference points. One is this one, and one is that one, together with this low right here. And we'll see if the market breaks, and if it wants to break either side, which side it takes, and which side it prefers to move through. And that will give us an indication going into the next few days what the market wants to do. So we'll let it do its thing. See where it goes from here. Let's see where it goes. Might have to be patient with this one, so don't rush to do anything. We really want the higher time frame candles, daily, 4 hour, but definitely daily, to see nice big bullishness and close above this high, and that will give a little bit more confirmation and increase the probabilities. Let's see how it goes. Right, that's oil. Lastly, gonna end up, as always, as is customary tradition, to finish with Bitcoin. Let's go to the monthly. We can see the previous month closed very bearish. We've got the current candle right here. I was looking at this level here as a next point of call for the market. If I go to the weekly, I was looking at the 20k level, if I'm not mistaken, from previous weeks. If I go to the previous week, the market was just dropping. I did outline a possible pullback, but the market didn't do that. We didn't see anything, so there was no trade here, and it just dropped even further down. Now, let me just delete some of these lines, clean up the chart so that it's clear to see, easier on the eye. I outlined these two levels here, two zones. We never reached that point. We did go lower. Okay, delete this. Right, now it's cleaner. Okay, so the question is, are we going to get that pullback, and are we going to reach these levels? So there's two scenarios to play out here, which is similar to the S&P actually. Do we want to trade into this zone as the buy scenario, or do we want to wait and sell? Now you could do both. And obviously with the higher time frame being very clearly bearish, I don't really want to fight the market at this point. Don't want to catch a falling knife. I want to see a very clear bullish setup and a very nice, very clear candles to the upside to create a bullish scenario. For that to happen, in order to trade this pullback of the higher time frame picture, so we're going to bear that in mind, that we've got the pullback. If we do trade the pullback into these zones here, we are going to be going against the flow, and it may take longer and may be slightly more tricky. So in order to do that, I would like to see a break above this structure high, then a pullback, which will give a nice cheaper price into this zone, and then a possible continuation into the first zone of target up here, and then the next one will be up here at the 28 level to be conservative. At the moment it's nothing, it's kind of ranging, it's showing weakness, closing lower than the previous week. So really want to see a very nice clear bullish candles closing higher and with momentum. Very easy to spot. We don't have that yet. This candle here, they had a wick to the upside, it didn't close very bullish. I want to see nice big bullish candles close bullish like this candle up here, or let me find one, or a pin bar candle like this one, and that would give us a better opportunity, a better setup for the buy scenario. Now if you want to play it safe, less risk, higher probability, I would say, would be to wait for the short setup, but that may take a while. And as you can see, Bitcoin has been ranging here for the last 2 weeks, not as certain as it could be, not as clear as it could be, I should say. Let's see how it goes. Once again, I'm gonna have to be patient on this one. It's not my favorite out of the lot for this week. What is better? I would say I do prefer silver, Aussie dollar, and Aussie CAD, I would say, are much clearer for now. So yep, bear in mind the news and trade carefully. It's NFP week and you do want to be more careful, especially on the Thursday, which is the day before, and Friday itself. We may see some volatility, and it may be the case that you might need to be a little bit more patient. You might just even have to sit things out and wait until Monday and Tuesday next week if the price action is not clear enough. Yep, that is what there is to say. Always want to be more careful with NFP week and NFP itself. Okay, those are the setups I have for this week for you. Thank you very much. Hope that's helped. Do leave a comment below and let me know what you're looking at and which setups you favor, and then let us see where the market develops from here with these particular setups we've got at the moment. Okay, thank you very much for watching for this week, and my name's Dima, and as always, good luck in your trading week, manage your risk, and I'll see you next week for another trading analysis week, and we'll go through some more good setups. Okay, take care and have a good week.